Let's get it going with pro trader Joe Tigay of Equity Armor Investments. Joe, the Fed has spoken and is leaving rates unchanged. What are your three to watch?
Yeah, so of course, the market may be a little knee-jerk reaction as the short-term rates are higher, but I'm mostly concerned about the medium to long-term rates. The 10-year yield peaked out a couple of weeks ago around 460, a little over that. And actually, when we saw the DeepSeek stir up in the U.S. markets where tech stocks got hammered, we saw some retreating in the 10-year yield. So that was very interesting to me. And maybe it's a sign that things can kind of return to normal if we can get past this shock wave of what's going on in the tech companies, because that will be good for tech stocks, the 10-year yield coming down. So want to see how that plays out on the day following this announcement for the Fed. I want to see how the rest of the world is dealing with it too, and the currencies are really important to everything also.
Why do you think the Fed did not lower rates?
They're interested in policy changes, so it's very tricky for them. There's a lot of talk about tariffs. There's a lot of talk about policy changes, but there's nothing set in stone, and anything can really happen. It seems like the prevailing wisdom is that tariffs will be left out there as a threat, and maybe not actually be put on as a bargaining tool. But that looming threat out there is just kind of tricky for the Fed to really get a handle on exactly what inflation will be. So I think they're going to be wait and see until something actually changes. They're going to actually move the needle on their rates. But that said, they are closing in on their goal of this soft landing. They're doing a fantastic job. There's no need to adjust right yet. If we do see inflation come down further, there's going to be every reason for them to continue on and cut rates even further.
Good to know, Joe. Thank you.
Thanks for having me.